Why do I look at the analyst estimates and the analyst reports about a company? Well, I've got to be honest, I am not perfect. In many cases, the analysts are going to be experts. They will be following this company and the sector or the sub industry. They'll be following these companies very, very closely. So they understand the nuances of the industry. They understand the macroeconomic swings and flows that affect this industry. Now, because of this, the analysts are going to be in a very good place to actually work out, what the impact is on this particular company. So, number one, analysts, I do enjoy reading their prognosis for the company and for the macroeconomic climate that will affect this company. In many cases, they have that expertise, that breadth, that they can identify issues and problems that I, as an individual investor, might not otherwise be able to capture, be able to notice. So that's really important to me. So why else do I look at analyst estimates? Now, analyst estimates are going to be different and their expertise are going to be different, and all analysts are going to be different. Some are very good at what they do. Some of them, I've got to be honest, I don't know how these people still have jobs. They just seem to be appalling at trying to estimate or forecast. And they seem to be continually wrong, continually not able to get things right. So let's think about that. We can split analysts into these two groups, all of the analysts, or we can pick the very best, the very finest analysts. Now, when we begin to think about that, there are services such as tip ranks, which enable us to go through and actually sort out those analysts that usually get it right from the rest of them for this particular company. So, hey, look, we can actually then begin to look at just the analysts that we think are going to be the most accurate and the most reasonable in their estimates, and we can then begin to go and look at these analysts. Now that's fabulous. Tip ranks allows us to do this effortlessly and easily in such a way that we can so quickly begin to evaluate, and pull out apart the best from the rest. And tip ranks then enables us to look at the best analyst estimates and to rely on those. Number three, another reason that I like to use the analyst estimates is they can follow everything over the company. They will be doing continually, they'll be doing a whole load of models, financial models, trying to, take the expected cash flows for the company, discount the cash flows they're going to be updating as the cost of capital for the companies begins to change. They're going to be looking at the wider economic climate. They're going to be looking at things such as the risk-free rate offered by US treasuries. And they're going to take all of these elements and they're going to be continually updating what it means for these companies. They do a fantastic job, and they don't usually just forecast one element like earnings. That's what I do spend most of my time, I confess, looking at. But they'll also go through and they will often provide estimates for many other factors as well. For example, they can also, in many cases, provide estimates of capital expenditures. So is the company going to be in a position where they need to make some large expenditures in the near future when interest rates are high? That could be something as an investor that I want to be wary of and careful about. They also look at other things as well. Now, earnings go up, earnings go down. Analysts can also be in a really good position to begin to look at things such as sales. Now, sales or revenue are going to be much more consistent and much more easily forecasted. So earnings could take a dip, but if that's disconnected from the underlying strength of strong earnings and strong sales, and the earnings are dipping down, but sales are expected to continue up, this is a little bit of a point for me where this is possibly going to be a really interesting time to enter and to take a position in this stock. If the earnings dip down, it could be the prices come down, providing me with an opportunity to then look for forecasted growth in earnings, particularly where this is a short-term, near-term headwind for the company, or they're reacting to as a particular situation, reducing their earnings now, but they're expected to jump up in the future. And that's always a really interesting opportunity for me as an investor as well. And particularly, as I say, if there's that underlying strength and growth and revenue there that I'm looking for also, which is going to be much easier for analysts to forecast and get right. Now, we can also begin to look at whether or not the analysts historically get things right. Now, for this, I like to turn to fast graphs. Now, with fast graphs, they've got the analyst scorecard. Now, that is usually, when I look at it, I usually look at this just for earnings. And we can very quickly see there's going to be a range of companies. For some companies, analysts have a lot of difficulty getting the estimates right. For other companies, they just seem to be always getting those estimates right. Now, there's two parts here. Number one, analyst competency. And then number two, the wider macroeconomic environment for that company. but also the management guidance and the management understanding of that wider economic environment and how that company is positioned. So again, not all analysts are created equal, but not all companies and industries are equal either. The ideal for me is finding a situation where the industry is relatively stable and management is able to provide really good guidance to analysts. And we have some good analysts here with a stable company and relatively stable industries. Now, that means that generally analyst estimates of company performance and earnings are going to be more or less the same. When this happens, it's a really good opportunity if prices begin to decline to start to take a position in this company and actually then begin to ride that price gain up as prices escalate and rise to meet the earnings growth in the future. What do you think about the analysts? What do you think about the estimates? What do you think about the information that they provide? How do you use this information? Is it a big part of your decision-making criteria? Is it something you look at just to fact check? Is it something that you keep half an eye on to try and understand if they have changed their opinions, but you have missed perhaps some important piece of information that has hit the market? Hit me up in the comments down below. Let me know what you think. Now, I would also like to invite you to watch another future video. This is one of my videos, one that YouTube thinks you should be watching next. It's going to be related to you, and I promise you it will help you with your investing and give you some new insight and new ideas. So thank you for sticking with me. I look forward to seeing you in the next video.